Hi guys, Harry Yotis here, professional trader for 20 years. Started my career in 2005 and still alive, barely 2026. Okay, let's get started. Big Wednesday. This candle right here, picture of the S&P 500. Big down day of 1.4% on the S&P 500, finishing at the lows and trading lower after market. We had a slew of data. Wednesday, the 18th of March, Fed day. It's basically oil and OPEX. Okay, Fed is basically a play on oil. Okay, so we'll get to the oil and OPEX narrative of this day and this market. This whole week, it's been basically the war. Okay, but first, let's talk about the technical picture. We're still in a sideways, choppy pattern. Longer term, I mean, during the past 2, 3, 4 months. So let's say midterm. Longer term, we're still up. Okay, so technically speaking, we're in a neutral pattern. However, short term, it's obviously down. Okay, we're down 5% from the highs. In the past 2 months, it's been down. But technically speaking, we're still short term. We're still neutral until we break this 652 level. Okay, then we're going to start going into bearish territory because we're still consolidating at the top here. Okay, despite all the negative bad news and the continuing bad news that is coming out of the Middle East. So technically speaking, we are still neutral, even though short-term going down, okay? Let's bring in the moving averages. Speaking of the technicals, we're right at the 200, okay? Guys, we're at extreme fear and approaching the 200. This is a good buy point. I know it doesn't sound like it. You have to buy for the longer term, like 2-3 months down the road, but this is a good buy point. And the secondary buy point would be 652, okay? Which is all the way down here. Okay, we'll tell you why later. This is a buy point because we're approaching. We don't just look at the technicals; we also look at the sentiment, and we are at extreme fear. Can we go at extremely fear? Extreme to the third fear? Yes, we can even like if you saw during the taper tantrum, we went down to 3, so it's very possible we can get there. But everything is at extreme fear. Okay. Market volatility, neutral. It's going to turn to fear very, very soon, okay, because it takes an average. So sentiment, extremely fearful with very, very bad news coming out. Oil still high. We'll get to that soon, but the sentiment is extreme fear. There's nothing more to say there. You should be buying here when it hits the 200. I'll be buying a bit, probably some kind of spread, okay. And waiting for it to get here to undercut. We'll be getting at extreme territory. It should bounce, okay? Remember, this is all oil and OPEX driven. But first, let's talk about some macro that came out that's very important, that adds to the oil picture, because oil going up is basically inflation, an inflation story, okay? We're talking about inflation versus growth. Oil means inflation going up, okay? So the first thing that came out today that is big news is the PPI. Okay, month over month, it came out at 0.7%. They're expecting 0.3. Huge miss, okay? Like if you look back 10 years, it's pretty high. It's not as bad as it was 2021, 2022, but that's still pretty high. If you ignore these prints, this is still very, very high. COVID printing a crap load of money, very, very high, okay? Powell said that this is probably due to the one shock of the tariffs that came out, and usually a 1-year delay. So the February print is basically due from last February 2025, and now you're seeing the effects. That's what Powell is saying, and there's going to be a one-time thing. We'll see. That's for tariffs, but he wasn't very sure about the oil thing, okay? So for now, the PPI 0.7 hot, that's 0.7%. That's pretty hot, okay? So let's get to the main event here, the Fed. Fed votes to hold rates steady, notes uncertain impacts from the Iran war. This is the key thing, okay? Powell was talking basically hawkish. He said, if we have inflation, we're willing to do what it takes to get rid of it. The economy is fairly strong. So the market thinks that because inflation now is on the horizon above unemployment, that Powell will probably act. And you could see this in the Fed Watch tool, okay? If you look in April, okay, there's a 97% chance that we do nothing. But this 2% chance that we increase rates in April because of the inflation, that wasn't here before. And if you look in June, okay, it's there, 2%. So there's like a little bit of a chance. Basically, they're not going to do nothing. Like if you go all the way to January 2027 or December 2026, look, they're going to do nothing. So rate cuts we had before, it was like a one rate cut maybe. Now zero, off the table. No matter what Powell said in his dot plot, the market is saying that there's a greater likelihood, 50% chance that nothing happens for the entire year. Okay, and the 1% chance that we increase by a 25 basis points by the end of the year. This sneaking in is what scared the market, and because of the inflationary fears, all because of oil. It's inflationary fears. Okay, so we had this going on. The Fed meeting did not help because if you can see intraday, once the Fed ended talking, let's go to the 15 minutes and get rid of the moving averages so you can see better. Okay, this is today. Okay, 2 o'clock is when it was announced. We were down for the day, S&P 500. Okay, we were down on the day, but fairly muted. After 2 o'clock and 2:30, the press conference, boom, down and finished at lows and opening lower, 660. Okay, right there. The market after hours is fearful, very, very fearful, pricing in a gap down open, let's say tomorrow. Okay, which would be good if you want to go long. So that's what the fear brings. This is what the Powell hawkishness brought into the market. Even more fear going forward because they think he's going to fight inflation. So that's why you saw the hikes coming in. Even starting as soon as April, there's a 2% chance of a hike. So you saw all of this is another bad news. We had the PPI print that's hot. We had Powell saying we're going to, fight this war, i.e. inflationary war, more than we're going to fight unemployment. And the Fed Watch tool is believing him. And by December, there's a 50% chance of nothing. All the rate cuts off the table. Okay, so what happened to oil because of that? Okay, well, even before Powell, we had oil. Okay, we had some news in the morning says that U.S. strikes Iran energy assets. Tehran votes retaliation. So in the morning, we go to oil. Okay, this candle right here, finishing at the highs, went as low as 91.6. This is U.S. oil, WTI, and now it's trading at 98. Okay. So if you look at the intraday charts again, this is what tells you the whole story. Okay, in the morning, like this is the whole day. It starts this candle here, around here, 9:30 opens. Okay, so by 2:30 in the morning till the market was opening, it was going up. Oil was going up. Okay, we had a little peak on oil, and then it went down during the day until the news comes out. Okay, and the news that came out is that Powell starts talking, and boom, oil goes up. People start buying it more because we had even more news from Zero Hedge. We had the U.S. is accumulating forces for a weeks-long operation to take control of the Strait of Hormuz, according to Israeli assessments. Khan News. So once you had that kind of news coming out where the U.S. might fight for the Straits of Hormuz, that could really disrupt the oil market. So oil is up since then. Okay, so you have the oil market going up exactly what is not good for the Trump administration. Okay, let's bring in the moving averages. Let's reiterate what we said yesterday. We are trading above. Look, it went and hit the 10 exponential, the 10 simple moving average. This is the 10 moving average. This is the 20. This is the 50. Okay, as long as it's trading above the 10, it's bullish. I don't want to go long here because this entire trade gets unwound somehow if there's peace. I don't know what's going to happen. Okay, we have no idea. But as long as oil is trading above the 10 and you're long from the breakout, stay. Okay, I'm not going short until I see peace talks. Okay, and peace talks concluding. Okay, so you'll see it'll crack and then continue to go lower. But until that point, the fear is maximum in this market because of this guy right here. This is what's destroying markets right now. Okay, oil. Okay, so I'm not playing it out. Okay, so because we don't know. If you're long, congratulations. Not time to get out yet. You have to get out when it closes. Whatever your rules are. Usually the rules are if it closes below the 10 or the 20, you can get out, whatever you want to do. But right now it's still very, very bullish, and everything as a oil bull is on your side. However, there's a lot of people long here. Okay, just be careful. Okay, this entire trade This entire trade, SPY, maximum fear, everything down to the 200. This entire trade unwinds if this oil fear scenario is taken off the table. Okay, so with that, we also have gold. Okay, gold tanked today because of the news that the inflation news from the PPI. So no rate cuts, gold got tanked, and because of inflationary pressures, I guess they sold gold too. Gold is not an inflation hedge, guys. Obviously, it's not even behaving as such. Okay, you would expect it to, but no, it's not. It actually does better in deflationary periods if you look at the history. So with gold, we saw under the 50-day moving average, it closed. So now this upward streak is in jeopardy. It's done. Okay, so now we're going to probably consolidate sideways, chop around. Let's see the RSI. We could even drop to, over the, today, tomorrow, over the coming weeks, if the war persists. Very strange to see no premium here. Okay. No war premium on gold. So it's trading with the market. That's what you have to be aware of that. So as the market is suffering, so is gold. Okay. I guess gold is not an inflation hedge. So you have to be very, very careful here. I'm still holding my positions. I still think that it's going to consolidate before going up. Before this situation gets settled, it's going up because gold was not going up for inflationary fears. It was going up because of central bank buying in the East and deficits in America and large debt. Okay, so it's still there. The story is still there. However, the upstreak is broken. Expect sideways consolidation. This is what I'm expecting for could be months. Okay, we could have it, or it could be as soon as this war is over. Who knows? But as long as the inflationary pressure of oil is there, there's going to be some kind of cloud over gold and silver as well. Silver is the same story. Okay. Although this is trading below its 50. So silver is even a more dangerous situation because it's going with the market more than gold. Okay, we're at 75 here and still looking in this consolidation zone. Okay, but the most important thing to look at is gold. Gold is the canary in the coal mine. It says everything. Okay, so that's it, guys. Okay, we have SPY. SPY approaching the 200-day moving average. Goodbye, because we are at extreme fear. I know it doesn't. It's counterintuitive. You should buy it, but hedge yourself. Either sell a put spread, longer dated, or very dangerous to just buy calls. Buy a call spread going forward. Okay, so sell a put spread or buy a call spread. The option premiums are very, very elevated. Do it for the longer term. Okay, because I don't think this situation lasts for too long because it'll be suicide for everyone involved. At that point, it doesn't really matter. Okay, but as we saw with the taper tantrum, the tariff tantrum, we can get really, really low. Okay, really, really low. The key is the 200 here looks like a good buy with protection. Okay, so conclusion, oil. OPEC's not so much right now. It's dominated by oil. Okay, that's the whole story. So we wait, we see, and we're trying to get in when everybody's fearful. We're probably going to gap down open tomorrow. It'll be great. Let's see how this oil trade, how this war goes on, because this is going to get nuts very, very fast. I mean, it already is. It's going to get more nuts. All right. Later, guys.